here's a quick video on the fixed price levels and how I've been implementing them into my current trading process. So obviously there's two ways to trade with market maker models, internal to external and external to internal. So this is the internal to external example where we're expecting kind of continuation in the upside. Traditionally with the BPR, as I was showing in previous videos, is that this is where we want to see price retrace into before we can finally expand. And so this is just a way of making them even higher probability, because often at these fixed price levels you'll see that price will retrace, reject, reverse, all of that good stuff. And so just when you have them overlapping together, that's when it's even higher probability. The other way is obviously external to internal. So if we have, for example, some sort of time-based liquidity, we have a high time frame candle, time cycle, quarterly cycle, and then we get some sort of S&T or just sweep and rejection into one of these fixed price levels, then we can anticipate a reversal if we were already expecting a high to form there. So this is on NQ from today. So for example, this is like an example of a BPR where we see price kind of expand away from this high and never rebalance it, come back down to it later. But we'll notice that this will actually happen with fixed price levels, and so that's why we see even higher probability. You see that we like expand higher. We use this one as support, reject, we just kind of ping pong in these. And so you can try and scout based solely off of them. However, I like to still kind of understand where price is going just based on structure and the higher time frame fixed price levels. But yeah, same thing here. You see we have this fat low. We retrace into it, overlaps with this BPR. The fixed price level on NQ, we're currently trading up into the 25K level, and we have that yearly S&T with ES. And we just haven't really had very many deep retracements for the last little bit. And just based on current news events, I'm anticipating that we're going to see a pretty heavy sell-off over the next couple weeks. On Bitcoin, the levels also work pretty well. These are the 25K intervals. And so we sold off from 125K all the way back down to 75K. And we have S&T with Litecoin here. And you see that within the 1K ranges, price just very cleanly kind of chops up within them, break into a new range, and expand to the next extreme. So the intervals I like using right now are for Bitcoin, obviously the 25K intervals for the high time frame ranges, and then the 1K intervals for kind of scalping. And you can even drop to like the 100s as well for like lower time frame confirmations and CSD. Then on NQ, obviously the high time frame 25K. We also have the 1K, which I really like. And then you can kind of fractalize that down into the hundreds, the tens, if you already know where the reversal is likely going to happen. And then obviously the quarters as well, is like 250, 500, and 750.